Hello and welcome back to another session of Market Outlook series. I'm Kavita Agrawal, the founder of EXP-Invest. And like every single weekend, we are here to talk about Nifty, Bank Nifty, and the intersector chart analysis. Today was the last trading session of the year 2023, and what a great year it has been. The market has rallied nearly 20% since the January 2nd, 2023 up to this date. That too with a weak beginning of the year in the month of 2023, January. Next, what can we expect for the January coming ahead of us? What is 2024 going to look like? Let's look at the time frames on our Nifty chart and determine that. Like every time, we are going to begin with the 3-minute time frame. All right. So on my screen, you can see the 3-minute time frame of the Nifty, and what stands out to us right at the onset is this negative range shift, which has already become very established on the 3-minute time frame. Now, if you're wondering what purpose does a 3-minute time frame have for a swing trader like me, the answer is very simple. The 3-minute time frame gives me a super early indication of when the momentum is going to turn. That doesn't mean I'm going to make my decisions on the basis of 3-minute time frame, but if I need to tighten my risk management strategies, then the 3-minute time frame can be a little bird to give me a early indication that, you know what, start paying attention. Make your stop losses super tight so that if there is any correction, you can get out with profits and if required, re-enter your positions. Because as a swing trader, I'm always trying to optimize. I want to capture as much of the upside as I can and avoid as much of the downside as I can. So the 3-minute time frame on Nifty is telling us negative range shift. And if you look at the past, this is actually a pretty strong negative range shift that has unfolded, especially since the rally started off here on the 28th of November. Now, if I take you a little bit more back, right, before this strong upside actually began, you will see there were also more instances when the downside happened. But since this strong rally, only twice it has so happened that the 500 EMA of the 3-minute time frame got breached. Right now, the price is definitely above that 500 EMA level. So 21,600 serves as a immediate support zone for us. Moving to the 15-minute time frame, the 15-minute time frame is not within the RSI negative range, I would say. However, it is definitely showing a RSI negative divergence. Now, if you've been following my videos, you know that this RSI negative divergence is the announcer of a negative range shift. So the RSI is already showing a negative divergence in the sense that the RSI has been forming lower lows. Last week, or rather 2 weeks ago, we discussed a similar negative divergence. This week, we see that the negative divergence has gotten even more pronounced, right? Also, when the low was forged on the 28th of December, we saw the 15-minute time frame breach the level of 30, which is again another negative point. So what are we seeing here? On the upside, the level of 22,000, which is my target level announced to you when the market broke above the level of 19,800, was it, or was it 200? I don't remember, but somewhere around that. I told you that 22,000 is the level that we can expect on Nifty, and the overall market was super attractive for swing trading. Now, what I will tell you is that the market is still super duper attractive for swing trading, but if you have active positions, you need to make sure that your unrealized profits don't turn to unrealized losses, right? Maintain your stop losses strictly on that. So the 15-minute time frame tells us a little bit of a sob story. 75-minute time frame, if you see, again, the negative divergence has deepened. We are still very much in the bullish range though. And for a negative divergence to have power in my eyes, I want the I want the right side of the divergence point, right? The right side peak to be below the level of 60. Now, since on 75-minute time frame and 15-minute time frame, the RSI is still sustaining above the level of 60 while forming a lower high, I would say that there is weakness in the market, but it's not something that I would absolutely sell my positions for. What I would do is I would give more attention to risk management than capital allocation at this point. Moving on to the daily time frame. The daily time frame is also super bullish, except for one little observation. Now, I want to cut some slack to the market that the volume might be declining because it's the holiday weekend. This is something that I've mentioned again and again on my Telegram channel as well. However, I am not comfortable with an uptrend which is unfolding with slow volumes, which again is not an indication that all hell is going to break loose. It is an indication that the momentum might be getting tired. If you witnessed this upside that happened, right? This upside. So you see here, the volume started to increase already. So this is the MACD of the volume, comparing 20 versus 100-day average volumes. So what this showed, that when the price started to go up before the final low was formed, we did experience an uptrend in the volume, uh, as well. And when the prices finally turned up really strong, the volume picked up in a massive way as well. Now, in the last leg of the upside that we've seen, the volume has not been as promising as we would like it to be. So what this tells us again is that I personally, as an analyst, have no reason to revise 22,000 target, or give you a higher target. 23,200 was the target that I was looking out for, but I have not seen as of now anything on the charts which would compel me to announce this as a target. So 22,000 continues to be my target for the moment. Um, I do expect, however, that the market might take a bit of a correction after touching the level of 22,000. Then, depending upon the nature of the unfolding correction, we will determine whether 23,200 needs to be brought into the picture or not. That being said, let's look at where the 1st of January 2023 was, and this is exactly where the year started. So I'm going to bring this vertical line and move it to the beginning of the year. So this was the beginning of a year. And since that very moment until today, let's see how is the market fared. We are up a massive 19 to 20%, which is fabulous. In fact, if you map the market activity since the year's low forged in the month of March, we are up 30%. So if your portfolio has outperformed the market since the low of March, if your portfolio has grown more than 30%, great for you. If it hasn't, my friend, you have underperformed the market. Okay. One very good way of looking at this is go into Zerodha, go into PNL, set your period from 1st April 2024 up to the date today, and see what you have performed. I did this exercise on all of my client portfolios, and I'm very happy to state that I have definitely beaten the market by a huge return. So if you are a trader, if you're not outperforming the market, I don't want to mention exact numbers because SEBI has regulations which bar me from doing that. But if you want to know more about how I have performed, please join my Telegram channel, where I will be posting my year's performance on the channel itself. The channel, as you can see on the screen, it is, or maybe you cannot see on the screen. No, yeah, you can see on the screen. Trade with Kavita is the name of my channel. I'm going to drop this link in the comment section for you right now. And if you are already using Telegram, you can just go and search for Trade with Kavita and join the first link that shows up. Don't make a spelling error like I just did. So search Trade with Kavita, join it. Every morning, I post a advanced level quiz for you to answer, and every day I also post my own market commentary, which tells you what I think about the market. I talk about these negative divergences that I've mentioned on 3-minute, 15-minute, 75-minute, important support resistance zone. So I think you would find it quite beneficial if you joined. With that, let's move on to the chart of Bank Nifty and take a look at what the prices are trying to tell us. So on this chart of Bank Nifty, we had noticed some weakness here and then a correction. The index took support right where our trend line was suggesting it would take support, which is amazing. Then we have Bank Nifty also going into a little bit of a negative range on the 3 minute time frame. I am not comfortable with this specific activity unfolding here, where the RSI is absolutely not going above the level of 60 anymore, even though the price was on the high. On the 15-minute time frame, again, if you see, there is very evidently there is negative divergence quite visible on the charts. Also a bit of a negative range shift. And if you see this massive volume surge that's visible, that is actually good, not so bad. This price correction happened against declining volumes, which is also good. Now, on the 75-minute time frame, if you will see, we can see that this yellow line, which is basically the 50-day moving average, is giving good support to the prices. However, the RSI negative divergence on the 75-minute time frame is way more pronounced this week versus the last week, which again emphasizes the point that I was telling you some time back, that some weakness can be expected in the market. Okay, don't worry about it, just make sure you're maintaining your stop losses. Going on to the daily time frame, the daily time frame isn't telling us a lot. I would say the daily time frame actually suggesting better volumes on Bank Nifty than the Nifty. This week, I would say the Bank Nifty is looking slightly better than Nifty is looking. So my target on Bank Nifty for the time being is around 50,000 for you, and we will see whether Bank Nifty takes a little bit of correction in the first month of the new year, or like it did last year, basically, right? Or what it does. We'll see, and then we'll take a call. So for now, this is all I had. Let's now move on to the intersector chart analysis, and we will switch to the 75-minute time frame. On this chart, we have the CNX 500 mapped, and we have lots of other lines indicating where our indices, other sectoral indices, how they're performing versus the index. So we saw this massive decline here, right? So from that massive decline, let's see who's been outperforming. So we can see that CNX metal has been outperforming the market. Now, if you go and look at the market outlook series of the last 2 weeks, I've been emphasizing to you that, guys, metal sector is looking very attractive. So that's that. Okay, I'm sorry for that. CNX 500. I'll just switch back. Yeah. So metal index has outperformed since the last Thursday's closing, and I can see that CNX metal has outperformed the market, or rather performed 7%. It's 7% up since the recent market low, closely followed by the CNX realty sector. Now, metal sector, I think, has a lot more opportunities. If you remember, we covered the stock of Nelco a few weeks back. There is very good opportunity unfolding there. We also talked about CNX realty sector. So realty sector has run up a lot. I don't think there are very attractive opportunities available there. Momentum is kind of dying out, so you don't want to allocate your cash right now. There are better sectors available. Auto sector, I think it is up right now, but I am not finding this rally very sustainable. On a larger time frame, I'm seeing signs of exhaustion, so I'm expecting some downside. So I'm avoiding the auto sector for the time being. Pharma and healthcare sector, I feel they've already given some correction and now are coming back up. So in my active recommendations for the Trade Together program, where I help retail traders do systematic swing trading, in that, I have included some pharma numbers, some pharma names. I will be showing you the performance in just a while. One of the stocks today went up 5%. Another one, I have given a re-entry recommendation, and I'm expecting strong momentum to unfold there soon. CNX commodity sector, not much comment there. I am very bullish on the CNX consumption, FMCG, and the Nifty consumer durable sector. I have again active recommendations in these sectors, and I think that some stocks, especially stocks like Bajaj Consumers, in fact, Bajaj Consumers has given a confirmation just today. It is looking super duper bullish. If you want the stock recommendation, the stock template of Bajaj Consumers, join my Telegram channel. After this call, I will be sharing the stock template on my Telegram channel for you to participate in. Next, we've already discussed, I am bullish on the CNX finance sector. So I'm not so bullish on the banking sector. right? But I think in the finance sector, there are some stocks which are giving pretty good indications. So that is why I have active recommendations from that sector in my Trade Together program. Now let's move on to the stock ideas that I have recommended. So the dark yellow lines that you're seeing, these are the longer term recommendations. So let me just sort it by color so it's easier for you to see. So these are the long term recommendations. I have obviously sanitized this data because I don't want to reveal the names of the stocks on a public platform. But as you can see, today I have recommended a new long term recommendation, and I'm very bullish on this stock. Um, all right, can someone just give me a confirmation that they're able to see and hear me? All right, I think we are reconnected. All right, moving on. So these are all the recommendations. You can see there are lots of capital goods, there's consumer durables, there's consumer service, financial service, healthcare, FMCG. There's one telecommunication, which I've been holding since 2 weeks, and I am super bullish on this stock. And there's textile. We follow a mix of large cap, mid cap, small cap stocks, and the allocation advice also changes according to expected risk, expected risk, market cap of the stocks, and the sectoral tailwinds, headwinds, etc. So if you want access, if you want to be a part of this Trade Together program where I help you out with these stock recommendations, then my friends, I would suggest that you follow the link posted by the ET moderator, through which you can avail my services. Go on the Gap Up platform. Great initiative by Riggy and Economic Times and Money Control to bring to you SEBI registered research analysts like me who can help you make very good, systematic, objective bets in the market. So go on the platform, subscribe now, and do trading in a mature, grown up manner rather than guesswork. All right. So now now that I have covered everything that I wanted to discuss with you, let's take a look at your comments, and I'm going to help you out with your stock queries. How you can raise your stock query is very simple. Look at your portfolio, identify the stock where you are in a loss or you're underperforming the market, mention the name of the stock and the buy price. I will look at the charts, share my screen, maybe teach you a little technical analysis in the process, and help you out with key levels like stop loss and target. So go now, open your portfolio, find out name of the stocks, give me the stock name and your average cost price, and I will give you actionable advice on that. Let's start. All right, let's see. We have a lot of attendees today. I love working with a dedicated crowd. It's the year end. Everybody must be in a festive mood, but here are people looking at webinars on Economic Times and YouTube to become better traders themselves. Fantastic. All right. And quick reminder from the ET moderator, if you are enjoying this session and if you think the information being shared is valuable, is helping you become better, please give a thumbs up to this live stream and do invite your friends to the next live webinar that we're going to have on Monday. Also, don't miss the sessions that we had on Alchem. We had a session on JK paper. We had a session on Nelco, where I have shared very objective analysis. We have had sessions on risk management strategy for swing trading. We've had sessions on how I made 23% in 2.5 months in Alchem, behavioral finance. Whenever you get time, take a look at those videos. I'm sure you might be able to learn a lot for improving your swing trading. All right, let's see. We have Ashish with us. He's asking for analysis of this stock, Arcon. Great. Let's see. Super bullish stock. However, I feel the rally might be behind the stock because just look at that beautiful rally that has unfolded. Stock has moved up already 4x in a matter of just 2 years. Whenever you buy a stock, you want to make sure you're buying stocks where the rally is ahead of you, not behind you. Clear cut negative range shift on the 15-minute time frame. I would like to wait for this stock to come down a little bit, at least 10-15% correction. So 145 is the level that I would wait out for and then take a decision. However, if you have an active position in this stock, then I would strongly suggest, if you have an active position in the stock, then I would strongly suggest that you please maintain the stop loss at the level of 160, because here this blue line is the 75-minute time frames 200 EMA, which can act as a strong support. Um, can you read the share name if not possible to show? No, those are sanitized stock recommendations because my premium members have paid for the recommendation. So it's not fair to them to reveal those names publicly for free. So if you want the names, you will need to become a member too. All right, you need analysis of Oro Pharma. So Oro Pharma has actually also moved up quite a lot. It's just amazing the beautiful rally that is unfolded. In fact, we had an active recommendation here, and we booked around 86% in Oro Pharma a few months back. We got out because we could see there was a negative divergence unfolding, but that negative divergence did not really lead to any massive correction, just a mild sideways consolidation. Now again I can see that there is a negative divergence unfolding. So for the short term, negative Oro Pharma is definitely not looking positive. I would urge you to maintain a stop loss right here at the level of 1040 and hold the stock. I think the target has been achieved. This trend line, this green zone is my target. It's already been achieved. So now that you're still holding, if you're still holding, just keep moving your stop loss for every 1.5% upside on the stock. I am doing very well, Kanakraj. I'm seeing you after so long. I hope you're well too. Let's take a look at HEG for you. HEG, again, we see some negative divergence correction, and this is the beginning of a very, very fresh leg of upside. I think this rally can sustain itself because it has positive indications coming in from the EMA, where the stock took support at the 200 EMA, the stock took support at 30 on RSI, the volume trend is super positive. So I think this looks very, very positive. It's a very good stock to make fresh entry in. I would recommend you, however, the stop loss will have to be a little big. The stop loss will have to be 1690, which means you're looking at a 10% stop loss. So instead of making a bulk purchase, maybe in the first couple weeks of January, I'm expecting some kind of correction to come into the market, right? Maybe you can try to set GTT orders here, and here, and you can average your buy cost that way. On the upside, I would suggest a target at the level of 2580. Wonderful stock, wonderful upside seems to be unfolding here. The stock went into a bullish trend on the 3rd of April, and I think this rally can continue into a fresh upside of 70%, of which we have already seen around 30% already unfold. All right, we have Swati. Swati, welcome to the live stream, and you want to know about Geo Finance. So Swati is a very new subscriber of the Trade Together program. She's joined the Esteem plan for a whole year, and I'm very excited to work with Swati. So Geo Finance is naturally very bullish. I am very bullish on Geofinance. Geofinance looks great for the coming time. If you look at the 70 on the 15-minute time frame RSI, strong RSI positive divergence, and on the 75-minute time frame, the stock has just taken support at the 200 EMA. I love it. Very good. The 75-minute time frame is already in the bull range, and I expect this bullish momentum to continue. Now does look like a very, very good time. Let me also mark this very important zone passing through here, right? You can see why it is important. There are so many times that this zone has acted as resistance, finally given a massive breakout. Where is the volume? Why is the volume not visible? Interesting. Why did I lose my volume? I don't know. Huh. Anyways, um, Whew. Okay, so we'll just look at the raw volume. We can see that the volume went a little up when the price was bullish, and then the volume got subdued when the price got bearish. So I think that Geo Finance looks pretty attractive. You can definitely continue to hold on to your position or even make a fresh position if you wish. Maintain a stop loss at the level of 225 and hold the stock for a very comfortable target of 256. So on the downside, I am looking at 3% stop loss and a 10% target, giving you a risk reward ratio of more than 3. And you know what I say about risk reward ratio. If you maintain the risk reward ratio more than 3 in every single stock idea that you participate in, there is no power in the world that can stop you from becoming a successful swing trader. All right, let's see. Aurobindo Pharma has been reviewed for you. Kindly give one good share for the New Year gift. Okay, sure, done. Join my Telegram channel. I'm going to be posting one New Year gift for all of you to subscribe to. The link for the Telegram channel has been posted already. So, one stock idea as a New Year gift for everybody will be posted. On that front, I would also like to bring to your attention that if you go on the Gap Up platform and subscribe to the Trade Together program or the swing trading plan that is on, there is a Happy New Year offer going on, offering you 30% discount. Use the code HNY30 if you don't see it. Ideally, the link which has been shared by the ET moderator already has the discount embedded. All right, let's move on and answer more queries. Superb. We have Saurabh asking for Orient Cement. Orient Electric is a stock very bullish to me right now, very strong. Orient Cement, maybe not so much. See, for Orient Cement, I'm getting a bit of a mixed signal. I do not like this volume activity here. I do not like the way the chart looks. Sure, the underlying trend is bullish. Um, I think the stock can come down to retest this level of 233 and bounce back from it with a little bit more, with a little bit more substance. So I would wait for that. Right now, the stock is a no-go. If you have an active position on the stock, please do maintain the stop loss at the level of 226. Considering, staying with the trend, let me see if I can draw some meaningful trend lines on the stock. The broader trend, it seems like it's not really formed yet, which is what makes me uncomfortable. So I'm just going to do my best to capture the most recent trend, which has begun since the year 2020, even though I don't trust it a lot. I am expecting a little bit more consolidation to continue right here. And I think for the short term, expect the stock to test this trend line, giving you a tangible target at the level of 290. So now if we look at the risk reward ratio currently on the stock, not very attractive. So downside potentially 10%, upside is barely 15%, risk reward ratio is only 1.5. Absolutely no go. See, in the stock market, the problem is not that there are no opportunities. The problem is that there are too many opportunities. So you always want to optimize, go for the best quality opportunities. How do you determine the quality of a trade setup? Look at the risk reward ratio. Does not matter if the stock is giving you 10% potential upside, if it is demanding 10% risk from you. Make sure that for every single unit of risk that you have to assume in the market, you get minimum 3 times the reward. So if your risk is 1%, your reward should be 3%. If your risk is 2%, your reward should be 6%. If your risk is 3%, your reward should be 9%. This is the basic minimum demand you have to keep from the market. When you consistently keep this demand, the market will start respecting you and start giving you opportunities which give you this minimum return profile. And when you do it consistently for 2 years, 3 years, 20 years, there is no power in the world that can stop you from becoming a super profitable trader. All right, Orient Cement. Mother-son performing. How do you see Mother-son performing for Dilip Sharma ji? Mother-son. in 2024. So today the stock gave a big breakout. I missed out on an entry, so I have a lot of buying orders already set on Motherson, and I think the stock is quite bullish. I am holding it right. I am planning to enter the stock with a potential target of 113 and 128. I think this stock is, it's a massive trender, and it has a strong resistance at the level of 130ish. So that would be my short term target on the stock. Here I can see that this uptrend, ever since this leg of upside has started, since since the end of November, the volume has started picking up, which is very very promising. But today the stock has already moved massively. It's up almost 6%. So I want to see the stock take a little bit of a correction, and since on the broad market angle I'm telling you that maybe mild correction can come once the 22,000 level is achieved, right? Then in that correction, I would look at Motherson for a potential entry. All right. So I think I am late for one of my calls. So I am going to have to end this session right now. And I'm going to see you again. So today's session will come to an end now. I will see you again on Monday with the Retail Trader Special Series, where I will bring to you one knowledgeable topic with a presentation and tell you, teach you good habits, hygiene points for successful swing trading. So if you want to join that again, make sure you click on my Telegram channel link, because before I go live, I post my links there on the Telegram channel as a reminder for all my members to join the webinars. Even if you can't join the live webinar, or you feel that there is, it's too long, there's lots of redundancies, don't worry. You can follow me on YouTube. I'm dropping my YouTube channel link. On my YouTube channel, my trusted team spends a lot of time to edit these webinar videos, make them faster, shorter, crisper for you to absorb more knowledge from the same content in a shorter amount of time. So be sure to subscribe to me on YouTube as well. Now, with that, I wish you a very, very, very happy new year 2024. And may this year bring you a lot of prosperity and a lot of profits in the market, in your portfolios. Thank you so much for listening to me and joining in today. Namaste.